Welcome to the September 2nd, 2024 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. What led to the Dow Jones Industrial Average making another new all-time high this week? I believe this is the report, the Personal Consumption Expenditures Index. That is actually the Fed's quote-unquote preferred measure of inflation. And you can see this decline. The peak inflation here was 7%. For another measure, it was 9%. And the worst month was actually annualized at 15. That was back in 2022. And you've descended to 2.5% for this measure of inflation, supposedly the Fed's favorite. Well, that enthusiasm spilled over into the Dow Jones Industrial Average. The government is leaky, so the news probably came out a day earlier when the Dow hit 41,578 for the first time in history. That was the intraday new high on the Dow. Don't forget what happened in August. This is one reason you should subscribe. By the way, I'm Spencer McGowan, your financial weatherman and president, McGowan Group Wealth Management, a team of 11 dedicated to your success as an investor, and this is proof. Thank you for tuning in. Look at this. This is the beginning of August. Right? There's a Dow new high. Boom, what happened? That was a delevering caused by the Japanese yen skyrocketing. The hedge funds had been levering up, a lot of it in U.S. tech, and we'll look at that in just a second. But in any case, we rallied to new highs, and I'm going to show you a couple of reasons why at the end of the video. All right, what is this? This is Best Buy. Whoa, and this is really why today's program is titled The Other Side of the Tracks, illustrating two types of consumers. Best Buy had a nice gain in their actual profit. They still have slightly declining sales, but they raised their forecast. It was about a 6% increase. It indicates that at the high end, the consumer is doing pretty well. Now, what happened here? Dollar General, the other side of the tracks. Whoa, this is a 30% decrease in the price of Dollar General. Now, you can make all the case that they may not be well managed, but that is an absolute implosion. And they said their core consumer is financially constrained. So at the lower end, inflation still continues to drive a tight set of budgets at the low-end consumer. Now, what's this? All right, this is a ridiculous investment banking question, but it illustrates something. You probably don't want to overpay. That's one reason YouTube McGowan Group is a great place to come, because we're going to give you warnings. And those warnings can help you analyze your decisions in the year ahead. Our goal is to help you make more profit and to take great care of our clients. Would you pay, let's say we had a restaurant with $4 million in sales and maybe about $400,000 in profit, would you pay me $42 million for that restaurant? Well, that would be over 10 times sales now, wouldn't it? And it'd be 100 times current profit. That happens to be a $13 billion valuation for CAVA, an arguably mediocre Mediterranean food restaurant that is expanding rapidly, but the market loves growth. The market tends to overprice growth and underprice those companies that are just making a lot of cash flow. There's an investment allocation secret. Well, obviously this is not a recommendation for your portfolio because they have 309 restaurants and they're valued at $42 million per restaurant. That is a ridiculous equation, and yes, they're expanding, but how fast would they have to expand to justify that valuation? I don't think they can pull this off, especially with their food. Anyway, now this, we look at NVIDIA. All eyes were on NVIDIA this week. It's all about NVIDIA's earnings report coming up. Are they going to beat expectation? Wrong question. They were too much in the sun. When everybody's focused on the same thing, and it's a household word for investors, It may be too much in the sun, and it's likely to wilt. So here is the new high on NVIDIA back in June, and we have a little descent with the delevering we mentioned in early August. Then it comes back up, and earnings were going to come out. Wow. And they beat expectations. Whoa, the stock should go up, right? No, everybody's expecting them to beat expectations. Just a question of how much. They're 14% below this peak right here. It's very difficult to trade something that everybody is paying attention to, and there might be better places to spend that research time than wondering if NVIDIA can fulfill these huge forecasts for future gains. Now, why would the market rally to new highs? We do this each week, the S&P 500 earnings grid. We do it during earnings season. We bring it to you. Look at these final numbers. We had said there were projections for double-digit profit growth. We said this a year ago. What'd we get? 11.4% earnings growth for the S&P 500. That is double-digit profit growth. Part of that is driven by artificial intelligence, which is a very fancy word for better computer programming and more processor power, but never mind, we'll get to that in a future episode. Sales were up 5%. That's more than inflation over the last 12 months. That's a pretty healthy set of numbers in this most recent quarter. And look at this. Wow, the forward quarters from here projected to come in at double digits. We'll keep you posted, and we'll of course monitor it right here, McGowan Group Wealth Management YouTube channel. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.